Talk about a shakeup in the insurance market. The state is stepping in to stop companies from fleeing the state and leaving homeowners without coverage. More than half of the big 12 insurance companies in the state have either stopped issuing new policies or cut back on them. But here's the big trade-off. Insurance companies, for the first time, will be allowed to factor in the future risks of extreme weather and wildfires into the rates. Dahlin explains, yes, that means your insurance is probably going up.
Even if you live in the city, chances are you'll see an increase in your home insurance premium once the new rules kick in. For weeks, homeowner Brandon Essenther struggled to find a company willing to insure his San Francisco Victorian.
Frustration, anxiety of not knowing if we were going to be able to find an equivalent policy.
Farmers dropped his friend's policy, so when he called his agent, he too learned Farmers would drop his policy because the company is non-renewing buildings constructed pre-1925. He had always paid on time and never filed a claim.
And there was no conversation, you know, it was a very abrupt, you're being dropped. It doesn't matter what our history was in the past, you know, what type of client you've been to us.
In the past year, 7 of the top 12 insurance companies doing business in California have either paused or restricted new business in the state, citing inflation and climate change.
The data shows that companies are paying out $1.13 for every dollar they take in. This is not sustainable over the long haul.
Mark Seknin is the vice president of American Property Casualty Insurance Association, which represents insurance companies. He welcomes Insurance Commissioner Ricardo Lara's announcement to reform the industry. Right now, California doesn't let insurance companies consider current or future risks when deciding how much to charge for a policy. They can only consider what's happened on a property to set the price. The commissioner says he'll write new rules to let companies look at future climate models when setting rates.
More availability in the market, that companies that may have stopped issuing new policies or may have left the state may revisit California.
Harvey Rosenfield is the founder of Consumer Watchdog and author of Proposition 103.
They're willing to pay the ransom, or more correctly, our elected officials are willing to make us pay the insurance industry's ransom.
All right, continuing Daw's story, California homeowners are not alone. While we have homes tucked into hills that are prone to wildfires, Florida is seeing a similar insurance crisis. Of course, there, the problem is the threat of catastrophic hurricanes.